Hello everyone, welcome once again to my home office. I am greeting you here once again because COVID cases, as you know, are beginning to spike in every country and Mexico is one of them. So I hope everyone is doing well and is safe. My name is Nestor Armstrong and I'm part of the Popular Investor Program. As you all know, I create these videos from time to time to give you quarterly results and my insights on the market. I would like to start off by informing you all that 2021 was the third year in a row in profit for our portfolio, and as such, Etoro has recognized this portfolio. And as of January 2022, we are now part of the Legacy Club. It is a special achievement given to portfolios and investors that are able to produce consequential years in profit. As you may have known from the quarterly results from the last year, we closed 2021 with a yearly 12.50 profit. However, this quarter has been a little bit different for us. The portfolio has leaped 15.38% year to date. Now, while that piece of data itself might be something alarming and something that you might be concerned about, the Standard Poor's 500 index, which is the index that I use to compare our performance, has lived 13.96% in year to date. So, if you would like to compare it with other portfolios, uh, Warren Buffett portfolio has lived 11.33% this year to date, and two of the most copious portfolios here in Etoro, which are from J Nemesis and Wesley, have slipped 24.78 and 19.98%. These two last ones are the most copied investors in the platform currently. I give you these numbers so that we can have a proper perspective on how the market is doing right now, where we see a trend downhill, which is nowhere near as low as Kathy Swoop's ARK Innovation ETF, for example, which is at a staggering minus 52.77%, which just comes to show us that there are many places to hide on this economic arena. What many people have been doing right now, many investors and traders alike, flocking out of the tech stocks, tech companies, and moving. They're doing this basically because there is a lot of shortages due to the war on Ukraine and Russia. Many investors are betting on the shortages, Warren Buffett included. And while it might be enticing to do so and move into the highest, most hot sector in the industry, I find it difficult to invest in these companies due to the fact that many of these companies are part of the problem of why we have so much climate change. Although my portfolio is committed to beat the index and provide you with good returns, I do not find it ethical or morally appropriate to invest in these companies that are basically destroying our environment. In regards to our portfolio, there has been a few changes and added some companies that resulted attractive at the price point that the 2022 correction gave away. Many of these companies, you might know them, you might have seen them on a stock information or an ETF, while many of the others, you might be a consumer of these companies. And I believe that I managed to build a solid portfolio that have companies which consist of a good business model, a strong moat, and that they are at an attractive price point. Now, I could list you a million reasons why the economy might be going for a downhill, and there might be good enough reasons to think that the worst is behind us. The truth of the matter is that no one really knows what the future holds. So, timing the market in a way that I see many of traders and investors alike are doing, that they're basically just betting either against or for the market, historically speaking, has never ended well for the 99% of them. Sure, that 1% of the people who make it will make you believe that you can actually time the market and that you can reap an incredible profit just if you decide to sell or buy at the right time. But we have been shown time and time again that timing the market is a lot worse than time. There are still people that haven't invested since 2009 because they have been waiting for the next correction, for the next big downfall. And in doing so, they have missed one of the biggest bull runs in history. So what are my expectations for the following half of the year? Ideally, I would like for the portfolio to recover and to end the fourth year in a row in profit. However, I am not blind to the problem, and as such, we have prepared a cash reserve and we are invested in a gold ETF, which will be utilized if the market decides to go downward again. Now, as promised, I have a couple of questions that you have asked me in the past couple of months, and I would like to answer them in this segment. Our first question is, what are your thoughts on Chinese stock market meltdown? Well, as you all know, and probably have heard it in the news, the Chinese stock market has received a heavy downfall in the past couple of months. If you have watched my portfolio, I invest in companies that have some sort of market in China, especially the luxury brands that I carry in our portfolio. But I have not invested in Chinese companies. The main problem with the Chinese companies is that we do not have a reliable way to know their numbers. They can bring out their statements, their balance sheets, but we have no reliable way of knowing, at least to the same extent as European or American companies, that they are telling the truth. And until we can find some transparency and some way to reliably have an insight into the Chinese market, into the Chinese companies, I don't see myself investing in Chinese companies anytime soon. You can see what happened to Warren Buffett's greatest ally, Charlie Munger. He noticed Alibaba was way underpriced and he decided to make a big bet on it. And we all know how that ended up. So to me, as of right now, Chinese companies are a bit of a gamble. My next question is, why go long on Hermes when it is one of the worst performers on the Paris index in the last month? What potential do you see there? I love this question because it came from one of the people that have a different view from what I have. And this person in particular was shorting Hermes at the time. Hermes was a company that was on my radar, but was so incredibly high priced that I never had the chance to purchase it. Until recently, thanks to the 2022 correction, we were able to snag Hermes at what many consider by DCF standards a fair price. Now, why do I like this company? I like this company because it is family owned. It is a 100-year-old family owned company. That is something that you don't see every day. Another thing great about them is that they hold a very solid cash to debt ratio. They also have great operating and gross margins, and their current quick and cash ratios, they are very well positioned in the industry. And as a bonus, they give out a 0.72% dividend. What's not? So yeah, while this person saw a worst performer, a company that really was doing very bad on the Paris index, for for me, it in my value investor eyes, it really represented a very good company that is a staple on the luxury industry at a very attractive price. So when it became fairly priced, I obviously jumped on it because it is one of those companies that is on my radar but are usually very highly priced. I have another question related to luxury. What LVMH, Moet Hennessy, Louis Vuitton is a exposure to China? Most fashion brands make 30+% of their revenues from China. And you are correct, sir. LVMH exposure to China is 37%. That meaning that 37% of the revenue comes from China. And to follow up with this, do you think LVMH will go up in the coming days? Well, I don't really have. This question was asked right before the earnings would be published. I, of course, knew that they would be that they would be that they will be giving up good numbers. And while my investment horizon really is not just a couple of days, but months and years, I did expect for the stock to for the stock price to go up because they were about to produce some good results and a good quarterly earnings report. Once again, I would like to thank you for all the questions that you have given me. And if you have any more questions that you would like me to answer on this, I'm readily available at the Etoro platform, or you could put a comment in this video. That being said, I will be keeping an eye on my investments and on their quarterly earnings. This next quarter will be very important since we will be seeing the effects on raised inflation and the war in Ukraine. I want to thank all my copiers and my followers for their trust and confidence. My name is Nestor Armstrong, popular investor, and I hope you stay safe and invest smart.